Have you thought about investing in closed-end funds? Well, here to talk with me about this is Will Rhind from Granite Shares. Will, welcome.
Thank you, Bob.
So you recently wrote an article about this very topic for Retirement Daily, and we're eager to have you walk us through it.
Thank you so much. Good to be with you.
Where to begin with closed-end funds?
Well, closed-end funds are very similar in many ways to probably the most popular and most well-known of the fund categories, which are mutual funds. But actually, what some people may not know is that closed-end funds have been around the longest. Actually, the first closed-end fund that we know about was established in 1893. So a long, long time ago, and definitely the precursor to the modern-day mutual fund.
Right. And as folks know, we've been focusing on pass-through securities, MLPs, REITs, et cetera. And you would categorize closed-end funds in that same fashion, I believe, yes?
Yes, exactly. So the regulatory construct is very similar to the mutual fund. The big difference, though, hence the name, is that they are closed-ended and not open-ended like a mutual fund. And what the closed-end means in terms of the closed-end fund is that it has a fixed amount of capital. So a closed-end fund is listed on a stock exchange in an IPO process, very, very similar to a regular corporation, such as Apple or any other corporation you can be familiar with. Therefore, you need to hire a broker-dealer or investment bank to sponsor your listing, and you take the particular fund offering to market via an IPO process. And what that means is that you raise capital from investors during that IPO process, and therefore the fund might raise, let's say if it's $100 million during that fundraising process, the fund has a fixed amount of capital of $100 million to deploy in whatever investment strategy it is designed to do. And so investors trade those shares on the secondary market, just like they trade shares of any other listed corporation. But the big difference between the closed end and the mutual fund is you can't go and create more shares on demand unless you go through the corporate action process.
So what, from your perspective, are some of the appealing aspects of closed-end funds?
Well, closed-end funds, in terms of their appeal, number one, I think, is the choice. So you can get exposure to all sorts of different asset classes and strategies. But obviously, the main reason we're discussing them here today is, of course, they're also appealing from a generating yield perspective. They can be high income generating vehicles. And there's sort of two aspects to that. There's one which is at the strategy level. So for example, if it's a closed-end fund that invests in, say, junk bonds or any kind of high yielding instruments, that's also appealing. That can generate income. And also the closed-end fund can use leverage as a way to enhance those returns, which is also something which is important to note. But the other thing is that because of this closed-ended nature, because the fixed amount of capital, those shares typically trade at a discount or a premium to the fund's net asset value. So that means that if you're able to purchase those shares at a discount, on the theory that over time, the discount can perhaps migrate to an NAV or a net asset value, that further enhances your ability to generate yield or income.
So just some general thoughts about the income from a closed-end fund. If the yield on a fund is higher than average, would you regard that as a riskier investment than if the yield was less than average?
I think it depends, like any fund investment, in terms of what the underlying is. Like, in other words, what is the fund investing in? So clearly, just as a sort of, I suppose, a statement of fact, that if you have a higher yielding fund, typically the trade-off, all things being equal, must be that the underlying strategy or the underlying investments are, in their definition, more risky than something that's not. So I definitely want to make sure that we look inside the fund and understand what the strategy is and what it's investing in.
And then in terms of discounts and premiums, are you averse to investing in CEFs that are trading at a premium?
I think it's difficult to justify investing in anything that's trading at a premium. So I'm not saying that there's never a reason to not invest in something at a premium. However, it's difficult to justify if all things being equal, the same or similar exposure can be obtained by investing at an NAV or indeed a discount somewhere else. So typically when there's a premium, it's because there might be a unique situation that would cause the actual shares to trade at a premium to the net asset value. So for example, there have been some cases with funds that have an underlying link to cryptocurrencies, for example, that have traded at premiums. And that is very unusual circumstance surrounding that particular asset class, i.e. there's more demand than supply for the shares, and that's pushing the actual share price to trade at a premium.
And then in terms of where you might hold a closed-end fund, would it be better to place it in a taxable account or a tax-deferred account like an IRA or Roth IRA?
It's a great question. I think, because they're typically bought with income or yield in mind, any kind of tax sheltered or tax deferred account would be probably preferable in terms of earning income. However, that obviously doesn't preclude you investing for holding it in a non-taxable account.
Right. And then in the article, Will, you mentioned that there's a place where folks can go to learn more about closed-end funds.
Yeah, no, absolutely. There are a number of good resources out there. And, GraniteShares.com, obviously our website is one place.
So, Will, you mentioned going to Granite Shares. I assume that Granite Shares also offers some ETFs that invest in closed-end funds?
Yeah, that's right. So we have a ETF called HIPS, Granite Shares US High Income, and the acronym stands for High Income Pass-Through Securities. So it holds a diversified basket or group of pass-through securities, including closed-end funds. Actually, closed-end funds are the highest portion of the fund security ownership at present. And so the reason it does that is because you have the benefit of the closed-end fund, no corporation taxation, so passes through that income directly to shareholders, and you have the benefit of a diversified portfolio, so owning pass-through securities in other sectors as well, such as MLPs, BDCs, and or REITs. So by blending these together into one investment with a single ticker or single investment, you can generate a high level of income, and HIPS pays a monthly distribution, consistent monthly distribution that gets people a large amount of monthly income.
So, Will, this has been a great series. We've covered the four main pass-through securities: BDCs, REITs, MLPs, and today closed-end funds. Looking forward to chatting about our next topic when next we meet.
Thank you very much, Bob. Always a pleasure. Thank you.